Fair value gaps are constantly talked about in ICT circles. So in this video, I'll clearly explain what they are and how to find the relevant ones. So this space right here, the gap in between the high of this first candle and the low of this third candle, this is considered the fair value gap. This would be a bullish fair value gap, and the inverse, of course, would just be a bearish fair value gap. So we can watch how this would play out in real time. And you see that there is no overlap between the low of this candle and the high of this one. When you get that large displacement, you see that this is the fair value gap. Always mark out the 50% of the fair value gap, as price will often respect this. All a fair value gap is a price range where market moved so fast that no fair two-sided trade ever happened. It's an imbalance or an inefficiency. Price oftentimes wants to go back to fair value gaps, but not all of them. So we'll go into the charts. I'll show you how to spot a fair value gap, and I'll also explain to you how to determine which ones are the ones to be focusing on. Okay, so we're on NQ here on the 4-hour chart. And we can see that there are some fair value gaps marked out here. We also have this large inversion here. So we came down and then we closed through. So this green candle here is what made the inversion. And as you can see, we are currently getting some support from not only the 50% of this inversion, but also the fair value gap that overlaps it. So when you see overlapping fair value gaps, generally those are going to be relevant. Those would be kind of important levels that you would want to be looking at. So you can see when we zoom out, this is what we have this fair value gap down here. Now I can just get, one quick thing out of the way. This is kind of a tough, this is a tough area. You have equal highs here. Actually, you have three. You have three equal highs here, and then you have, equal lows down here. So it's hard to tell, ultimately you'd want to see one of these get swept. We're just basically ranging currently. But this is, this fair value gap down here, currently it is irrelevant. I don't particularly care about it. Now, that doesn't mean that I'll never care about it, but right now I don't. Why it may be important, because it's also overlapping with where we had this change in the state of delivery here, right? So it happens to overlap. We had that expansion candle through, leaving the fair value gap. This is what you would want to see. Also, if we were to come down, we would likely get support from, the change in the state of delivery that was caused here. So now let's look at these. Okay, so we have this big stretch of fair value gaps here. What ones do I care about? You see this VI, that is a volume imbalance. You can think of it the same way. So if I'm looking at this, and I am, let's just say that my bias is short. I think we're going to go clear these lows out. We continue to fail to take this. Again, I'm not suggesting that I would actually think this way. I'm just, for the sake of argument here, I want to go short, but I want to wait for a retracement. What one of these do I want to see a retracement to? I don't want to see, if I'm not sure, I may just think it's this first one, enter, put my, stop loss here, and then get wicked out because it actually wants to come retest one of these up here. So a quick and easy thing that you can do is, think about these two rules should really always be in your head. One, the higher time frame fair value gaps are always going to be more important than the lower time frame. Also, if you ever get overlapping fair value gaps with other PD arrays, you can think of those fair value gaps as being useful. So I would take the high and the low of this range right here. You get the highs and the lows, all right? And then I would say the 50%, you'll notice in many of my videos, I talk about the 50%. I am looking at the 50% of effectively everything. And if I am going to continue bearish, I honestly don't even want to get into these OTE areas. I want to see the 50% be the line in the sand and it struggle to even get this. But what do you notice? The 50% is almost perfectly set on the 50% of this fair value gap. So if I were to be thinking about this, what one of these is relevant, I would immediately be jumping to this one because the 50% is there. Now, another important thing to think about when you have fair value gaps that are basically overlapping each other like this, the best thing to do is to just create one. Make this red because these are technically bearish. I could have included that, but I would actually consider this almost its own. Yeah, I would leave that alone. And again, if I'm bearish, I never want to see price going up to here again anyways. That is way too deep of a retracement to continue lower. I don't want to see this to that. I would want to see this, right? So if you notice, what did we just do? We connected all of these. Now, the 50% of all of them also is where? Overlapping this main fair value gap that I had mentioned previously. So we can be pretty certain that if we're looking for a retracement, we want to see it somewhere around here. Okay, doesn't have to be exactly, but we certainly want to see, especially the bodies, trying to be kept underneath here. We don't really care about wicks. We want to see bodies. If we see bodies starting to close up here, I would become less confident in short. Because again, we're getting a little bit too deep. We are up into that, OTE type area. But it would depend. Other contexts would have to be, start taking into consideration. So let's just play a couple candles out. So what do you have here? You have a little bit of AMD. Okay. You have the distribution. What happens after distribution? Accumulation. After accumulation, manipulation, back to distribution, clearing all of the highs of this accumulation range here. Also, left a tiny little fair value gap here. But as you can see, what are we currently getting? Exactly what we talked about. A retracement here. We're getting rejected off of the 50%. Also getting rejection off of this main fair value gap that I was focusing on. Sure, it says we inverted this. Again, I wouldn't care about that. I don't care that we inverted this. We would have to invert all of these before I would start thinking, okay, maybe we're actually going to clear all these highs first. But if I don't invert this stretch of bearish fair value gaps, all of them, I am bearish. Okay. And as you can see, we're currently meeting resistance from the 50%. Let's play it out. Let's see what happens. And almost to the tick, you get this large drop down. So we can kind of keep playing out. As you can see, this large. So we have a fair value gap, a bearish fair value gap that just got created here. So we rejected off of these four. And now we're creating new ones lower. Again, these are all bearish signatures in price. As you can see, what happens? We also create a small inversion, right? We got that big up with the big down, inverting this tiny little gap here. It is now overlapping with this bearish fair value gap. And what happened with this wick? We tried to go up, and we immediately got rejection from the 50% of this inversion and the lower portion of this fair value gap, which again, that's what I would want to see if I'm bearish. Bodies tell the story. So, when I see that from a wick, really strong rejection down, that is what I would like to see if I were to be bearish here. Again, if I were to actually be suggesting, that would not be Well, we're in 4-hour chart. So you can certainly find some trades in here. You just got to understand it's all fairly low probability when you're just ranging in between equal highs and lows. And you're basically at the 50% mark of them. Again, if we're thinking about the 50%, what does this mean? That this is the middle point of the range where you would want to just be kind of staying away. Wait for price to show its hand. Anyways, we'll continue. So now we have this bearish fair value gap that is showing resistance. So I'll just get rid of this for now. We'll keep it's still, it's not that it's not relevant. It will become relevant, but right now this is the new relevant fair value gap that I want to be focusing on. And it helps because yes, there's only one of them. I don't have to think between numerous. So we can play this out, see what happens. Again, we try to go up. This turns into a candle 2. We swept this high, closed back below within this range, and then you get this expansion from candle 3. So now, again, it's not that these aren't relevant, although this one up here, basically completely irrelevant right now. Just not something I care about. I could technically just start wiping a lot of these off of my chart. Because this is currently, if I'm going to be bearish, I am still focusing now on this. And what did we do? We left another one. We're also clearing lows, and we are starting to go what looks like to seek this liquidity down here. Getting rejection. Now you can see, looks like we're going to go try and make another hit. All right, so the wick does a lot of damage there. Body staying below the 50 currently. And now we are back at real time. So this is the last candle. We're going to have to wait until Monday to see what happens. We got a strong rejection off of the 50% of this. And this is another little slightly irrelevant from fair value gaps, but another little nugget of knowledge with big wicks like this. If I was to be looking at the next 4 hours, can you guess what part of this wick I would want to see get respected? The 50%. As you can see, we got rejected hard at about 25%. And then we went, cleared these lows, actually closed below what made the high, because this is what made the high. So we just care about the close. We actively closed through. This technically is a short model. I would go down to the 15-minute because I'm on the 4-hour. We're kind of getting off track here, but it's a good teaching moment. As you can see, more inversions, more fair value gaps start to pop up. But what do we have? Nice closure. You could argue like the problem is that Monday's going to open and it's likely going to just do the move for us, or it's going to open up somewhere down here and it'll, maybe you get a retracement to the new week opening gap prior to seeking this liquidity down. But I mean, currently looking at NQ, this looks like it wants to be going south. We shall see, but this is the change in the state of delivery. We closed below it. We would want to see some sort of, retracement. Where? Well, we have this one, and then we have these two here. I don't want it to go here because we already got rejection. So maybe here, maybe we sweep this high, so we touch that bearish fair value gap and then go down. And this would be what, I'd be looking for on entries. I would want to see, this is the change in the state of delivery on the 4-hour. I would want to see another change in the state of delivery down on this 15-minute and then enter from there. But as you can see, what is the relevant current gaps? I'm not even thinking about this one up here. Why? Because it already did its job. It held price, and then what did we do? We closed below this. And when we closed below, we retested and expanded farther down. This is the new protected high. So the only relevance of this is that if price were to close through it, my bias changes to bullish. At least temporarily on the short term, it would. We still have these up here, big, large, bearish fair value gap here that we would need to, deal with. Here, you can see that it's already held 50%. This moved down. We had to go lower, pick up more orders, which is what we are currently doing. It does seem like we'll clear this liquidity prior to potentially making another move higher. But what are the relevant fair value gaps? So how many do we have? We already talked about this one. We're not even taking it into consideration. So now you have this bearish fair value gap. You have this inversion, which overlaps, making this relevant just, by nature because of those two things. Now, did we already test it and expand past? Yes. And we created a new bearish fair value gap that we are currently respecting. What did we also do? We're actually sitting in this old fair value gap here. And this fair value gap has consistently struggled to keep its 50%. The fair value gap itself has held. This is like an OTE entry for a long earlier, right? You would have been targeting what? Internal range liquidity? Perfect. I would have been targeting this bearish fair value gap. This is the relevant bearish fair value gap. So you have this bullish fair value gap that has largely struggled. And what do you notice? We're actually closing very deep down into the fair value gap. So with all of this confluence, do I think we're going to reach back up here? It would not surprise me one bit if we do not. And we instead find all of the resistance right here. Because we are closing so deep in this fair value gap, we are about to invert it, potentially. Also, I find it interesting that the 50% is almost already acting like an inversion. Why? Because it closed below the 50% of this. Again, if this is a very supportive fair value gap, I would have wanted to see the closures not really go below this. Certainly not below the 50. But we blasted through the 50, closed below, left a bearish fair value gap, and on the following 15-minute candle, got rejected from said fair value gap and closed on the other side of the 50. All of this is relevant. It's not about what fair value gap is relevant. Sometimes it's multiple, and sometimes it's the story that they are telling you. So right now, ultimately, the more I am watching this as I'm making this video. So, the more that I do look at this, again, wouldn't totally surprise me if we went up here. Also wouldn't surprise me at all if we continued to get resistance from this fair value gap. This fair value gap also overlaps with what? What is this bearish fair value gap along with the volume imbalance? We'll just throw them together. What does this box overlap with almost perfectly? The change in the state of delivery on the 4-hour chart. Which again, when we talk about, what did I say earlier? Whatever is on a higher time frame is king. It is most important. Okay, so now we're on gold. We're on the 1-hour chart. And I want to start integrating the higher time frame fair value gaps into the active chart to show you how price will sometimes react to them. So as you can see, if I were to zoom out, you have all of these daily. You have a daily bearish fair value gap up here. You have a daily inversion here. You have a daily bearish fair value gap up here, albeit small. You have a daily fair value gap here. You have one here that we are actively currently trading through. You also have these inversions, you have this fair value gap, you have these inversions, these fair value gaps that are on the current 1 hour time frame. So I know that this looks slightly messy, but it's helpful to watch how price moves when we start to get into these higher time frame PD arrays, because there are times where they don't overlap. So if you have, like this for instance, this is an inverted daily that overlaps with nothing on the current chart. Like a tiny, I guess, gap right there. But nonetheless, there's no obvious fair value gaps that this is overlapping with. So if I didn't have this marked out, this would just be blank. I would be trading, we're getting bullish signatures, okay, and then I would take a long somewhere here, thinking that we're going to go maybe clear these highs. And unfortunately for me, I didn't mark out the fact that we have this inverted daily right here that is actually going. I mean, I should have noticed that there's also an order block on the lower time frame, but if I didn't, I would have ran right in to a bearish inversion where we could very likely reverse from. So we may actually just sweep this liquidity, hit this, and then reverse back lower. But if I don't have this marked out, I mean, or even this one, I'm just looking for, again, I'm looking for these highs. And if you notice, these highs happen to fall on what? The 50% area of the bearish fair value gap. So these things align. This does become a very relevant target where you have lots of liquidity sitting. So let's get a little bit closer. Again, we're on the hourly. So what do we notice? We are in a bearish daily fair value gap. And is the 50% holding? Not even close. In fact, we already almost inverted it. Not only did we almost invert it, but similar to the last example, the 50% is almost now acting as a support. It's almost acting as if it has been inverted. Not only that, it's finding support. And remember, if we have an inversion here, an inversion here, what do? Just connect them. Make one. Make your life easier. Stop confusing things. Okay? And what happens? The 50% is actually dead center in the middle of the two. Also happens to fall almost on top of this volume imbalance. But what are we noticing? We left this fair value gap here, right? We're sitting in a bunch of different conflicting fair value gaps. And this is a really useful kind of exercise to help you understand how do I react to a fair value gap based on what price is doing. So again, I told you earlier, the higher time frame fair value gaps are king, meaning by definition, this daily bearish fair value gap is not only relevant, but it is kind of the main player right now. All right, this is like the boss. If you're a video gamer, this is the active boss that we are fighting. Not up here yet. You could argue, well, Adam, why wouldn't I? Let's go to the daily just for a second, not to confuse everybody. What do you see? This is the fair value gap that we are currently in. We did a pretty terrible job at holding the 50. In fact, we closed at basically the OTE areas. You then have this fair value gap / volume imbalance here. So could I just connect these? Yeah, absolutely. You technically could. There's nothing wrong with that. And not only that, but when you do that, it starts to tell a different story. Now the 50% is holding. We closed below it. Wick, strong rejection, close below. So what's going on here? Let's go back to the hourly for a sec. And I know we're adding on more colors. This is probably becoming somewhat challenging to look at. But if you notice the 50% that I just drew out, that connects these two daily fair value gaps. We have already met perfect rejection from here down. We now got rejected again, second time, down. We got held up by this fair value gap here that we created on this short-term 1 hour chart, which is great. It's what you would want to see if I am going to remain bullish. We have an inversion here. We have a fair value gap here. We have the daily here. Again, I don't need to really think about that too much. Why? Because I've already connected the two higher time frame ones. If I just think about this, so this, we are being held up daily bearish fair value gap. We have an overlapping, which it's also being held up from right here, this fair value gap, which we will turn green. This, I'm going to turn red because it's bearish. Turn this one green because it's bullish. Okay, so now you kind of see the picture. And this is current F. Okay, so we cleaned up the chart. I don't need any of the other fair value gaps right now. This is the battle. This is what I particularly care about. Again, when we just looked at the one together, it showed us as having strong bullish momentum through it. When we combined them, it shows the 50% still doing its job, but I see a lot of momentum here. We are holding nicely off of the inversion, which is overlapping with the bullish fair value gap. Okay. We're getting the 50% of the bullish fair value gap. We're not even going down into the 50% of this inversion. Again, that is a bullish signature. If we had corrected down to here and then done this, again, it's not the end of the world. It's just not as bullish because we had to go much farther down in this range, in this area here, to go pick up the orders. But instead, we're getting nice support right here, looking like we want to go higher to that second daily fair value gap that was up here if we did not combine the two. So that's kind of the story that I would be telling myself if I was to be looking at this. It absolutely, you can see that on the short term, we have switched bullish. We're inverting fair value gaps. We are very close to inverting that one small or that first daily bearish fair value gap, looking like we want to move up to that second one. So yeah, this would be another way that you would want to be using fair value gaps. Don't ever forget about the fair value gaps on the higher time frames, because those fair value gaps are really those are the primary bosses, quote unquote, that you want to be looking at. Okay, so let's move to silver. This is the daily chart. So as you can see, we've been leaving behind lots of bearish fair value gaps. We're not inverting any of them, moving back up. Okay, we are just very clearly making strong bearish downtrends. Where would we be seeking liquidity? Somewhere down here. So this is the daily. As you can see, we have only bearish fair value gaps getting left behind. So if I was a swing trader, I would be looking for what? Do I want to see price come back up here? Not even a little bit. So these are effectively right now completely irrelevant to me. I do not care about them. All I care about are these ones. I don't even really care so much about this one. Why? Because it already did its job. The 50% held, and then we closed through what made that high. What did we also do? We left behind fair value gaps along the way. These now should be acting as the new resistance. What do we have? 3 lined up. We will just do all of them together. We will call this daily bear. All right. We also have that, continuation. So now let's go down. Daily goes with the hour. And this is a top-down analysis. So we're doing a top-down analysis. This is what I would be looking for. All right. So now, what did we do? We swept this low. You got some accumulation, manipulation, distribution going on. Now, what are you seeing? That we are inverting, bullish. So overall trend very bearish. We're also about to start getting into the battle. So this big box that we have around us is the daily bearish fair value gap. What do you notice on the hourly? You also have a bunch here. All right. So again, you could imagine that price in this area will be a fairly challenging time. And again, well, what about this first fair value gap? Well, yeah, I'm sure that it's probably going to meet some resistance at the 50% here. But just combine all of them, because this isn't going to really be the whole story. Sure, you might get some resistance here. You might get a little pullback. Where would you get the pullback to? Probably somewhere around here. So you might see something like this, retest in this area here. And then this is going to be where the primary battle. So something like this. Okay, so now we're on the hourly. Let's go down to the 5-minute. Let's first mark out what is being holding the main support here on the hour. And we don't have anything on the daily, because again, the daily, we've just been straight downtrend. All right, we're not really, sure, this is really old, which is fine. It's not the end of the world. It's not that we can't use it. It's just not as, it becomes less important the older it gets. So that's daily support, but ultimately we have this hour support right now, and we are now going to be ranging in between these two. So let's go down to the 5-minute. And what do we have now? You get this large gap. So really, this gap currently should be acting as the as the support. And then you don't really have too much going on. Again, we'd have to start going farther back here. There's something here, right? Like, you really can just start marking all of these out. Do I think they're relevant? Not really. Why? Because of these higher time frame ones. These are the ones that I primarily care about. On a short term, looking at a 5-minute chart, I don't care so much. The hourly stuff I certainly care about, because again, I'm a day trader scalper, so the lower time frames matter more to me. But again, what's going on here? So we have some bearish stuff. Just I'd connect all of them. So now you get a bunch of colors on the screen, and this kind of shows you, and I wouldn't have my chart marked out like this, but ultimately this is showing you where targets are. These are showing you the relevant fair value gaps that you should be using, and really trying to just ultimately drown out the rest, because it's just noise. Like, what if I'm bearish? Remember, when we look at the daily, the whole trend is a very bearish trend. So if we were to remain bearish, we're just retracing here. That's all this is. We're retracing prior to a continuation down. What would we retrace to? This area right here. So I need to see how we react to this. And then again, yes, I would expect to probably get some, this absolutely is going to act as some short-term resistance. So we'll get some tension there. Then we would look for another retracement. And then what? We'll probably get some more tension here, like we already have on this old daily fair value gap, until you invert it. And that's when you just kind of look for trades for that continuation down. If any of this was helpful to you, please consider liking and subscribing. Thank you very much.